This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE and Raleigh Goldsboro Recycling, September 11, 2017. Last week, commodity prices and economic reports were mixed. U.S. steel production rose slightly, remaining nicely ahead of last year and at the same rate of 2 years ago. Oil was up only about 20 cents a barrel, ending at $47.56 for the week, as supply and demand have become somewhat stable. Prices are under $50, and that's a negative for U.S. drilling, so the oil rig count fell by 3 to 756. Iron ore fell $3.50 a metric ton to $73 as we see some stabilization after increases in recent months. Scrap ferrous prices remain level. Most thought prices would be up in September, but with the unexpected planned shutdowns and a good supply of scrap, especially due to the Houston and Florida storms, prices unexpectedly remain mostly stable. Some scrap yards in Florida reduced prices due to they know material will flow in this week, so low prices will not hurt that flow. Hot-dip galvanized steel remains steady at $9.50 a ton after having risen in recent months. Copper fell 8 cents to $3.04. Some of the run-up was based on speculation, which came undone, but the trend is clearly on the upside, and copper was up 4 cents Monday to $3.08. The 5-year copper chart clearly shows that we're near these about 3-year highs. Copper inventories fell slightly, putting upward pressure on those prices. Aluminum fell 2 cents to 94 cents, but remains near its recent high. Looking at the 5-year chart, we see 94 cents is near the about 4-year high of 96 cents from 2 weeks ago. It is believed that the high is a combination of good demand combined with some speculation. Aluminum inventories were stable, meaning they remain near 10-year lows on the good demand in transportation and construction. The U.S. dollar dropped to a 33-month low as investor sentiment was affected by the North Korean tensions, the resignation of the Fed vice chairman, and the expected damage from Hurricane Irma. A weaker dollar lowers prices that U.S. companies use to export, so they are helped, but it drives up prices of imported items and puts upward pressure on commodity prices. The U.S. Composite Purchasing Managers Index rose to 55.3 in July, the highest reading since January. This shows that both services and manufacturing are increasing in the U.S., which puts upward pressure on commodity prices. Chinese exports rose 5.5 in August, slower than the 7.2 rise in July. Look carefully at 2008, though, on this chart. Chinese exports are up about 40% from where they were at the high just before the crash of 2008. China remains an enormous export machine, with August exports to the U.S. up a big 8.4% over last year. Initial unemployment claims were the highest last week since April of 2015, more than 2 years ago, due to the impact of Hurricane Harvey. Hurricane Irma will continue to hurt these numbers. The stock market fell slightly for the week, ending at 21,798 on news out of North Korea and the possible changes in interest rate policy by the resignation of the Fed that we just talked about. The U.S. IBD TIPP Economic Optimism Index rose to 53.4 in September, the highest reading since March. This is an index of how Americans feel about the economic outlook for the next 6 weeks, with anything over 50 being optimistic. We wish all in Florida the best as they begin to recover from Hurricane Irma, and as always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.